In the UK, the FTSE 100 fell around 2% this morning, still on fears of the impact of the coronavirus. Let's bring in Juliana at this point to tell us more. Hello, Juliana. Good afternoon. Well, shares in luxury goods makers that count on China as a major market are under pressure amid the outbreak of coronavirus. Talk to us about the share prices of Louis Vuitton, Burberry, Christian Dior, and of course, others.
Good afternoon, Chimeze. Well, I don't want to repeat too much of what my colleague was saying in Frankfurt, but now that 80 people have been confirmed dead, there is a real panic around the coronavirus becoming a global epidemic. Of course, we have seen that the markets in China are reacting badly, and this is having a major effect in London. The biggest stocks and shares that are falling are, of course, anything that's connected to China, and that's not just the luxury goods market. This is also affecting airlines. IAG, they're the owner of British Airways. Their stocks were down about more than 5%. Also, EasyJet, the budget airline, their shares were down over 5%. You asked about the luxury good makers. Well, they're really suffering at the moment. LVMH, which is Louis Vuitton, Moet Chandon, their shares were down nearly 4%. And also as well, we've had shares down by the Burberry Group by 4.57%. Of course, the Chinese authorities, we know, are really trying to contain the spread of the epidemic, but the fact that it's travelled overseas has sent the markets into a frenzy.
Well, it's the week of interest rate decision by the Bank of England. How are the markets waiting for Thursday's rate announcement?
Well, the markets in London started off pretty dire this morning, and it hasn't picked up at intraday. Yes, there is the BOE MPC meeting on Thursday, where there is the will they, won't they cut interest rates down from 0.75%. A couple of weeks ago, there was a high certainty that this would happen. But we have had really decent data coming out of the UK economy. Those flash PMI figures that we received last week showed that the Boris bounce after his general election did, for the first time, see consumer confidence in the UK rising and business optimism also booming. Also, the labour market in the UK pretty good at the moment. Over 200,000 jobs added in the last quarter of 2019, and unemployment figures are at the highest rate, at the lowest rate, record low rates that they've seen in a couple of decades. So it appears as if most people seem to believe that the rates will remain unchanged. But we'll look at the numbers. At intraday, the all share is down 2.31%. The FTSE 100 is down 2.47%, and the FTSE 250 down 1.84%. In currencies, the pound is up on the dollar slightly by 0.10%, up on the euro by 0.14%, but down on the Asian Japanese yen by 0.22%.
Well, an interesting one that caught my attention this morning, the caption, "Time to stop the football banter in the office." What's your take? Are you one of those who wants sports banter in the workplace but trimmed down?
Well, I've got to be honest with you, Chimeze, it's not something that affects me in this office at all, really. But, you know, it's been a topic of discussion for a couple of years now. And what this management company are trying to say is that the more offices and office management encourage banter about football or cricket or any other sport, then it can lead to laddish behaviour, and it can disenfranchise female staff from the office. It hasn't picked up much news, but on social media there has been a lot of reaction. Some people, the majority of people, think it's a load of rubbish because, of course, there is a popular, very popular series going on in the UK at the moment called Love Island. And even though we know that there are some males that watch it, a lot of female staff workers do talk about Love Island. I would say it's similar to Big Brother in Nigeria. And there are other cases of this. So most workers believe, look, if you stop one thing, you have to stop another. You know, we already work as hard as we can. So if we're allowed to have some banter by the water cooler, whether it's about football or shopping, and then so be it.
Sure. Well, for me, I'm not a football fan, but I don't mind listening to banters because you never can tell. I may have one or two things to learn. Anyway, thank you, Juliana. Enjoy the rest of the day.
Thank you, Chimeze. Thank you.
In Asia, Japan traded lower today as investors appeared to be wary about the fast-spreading coronavirus, which started in the Chinese city of Wuhan. The benchmark Nikkei 225 fell 2.03%, while the Topix index declined 1.61%. Markets in Australia, China, Hong Kong, Singapore, South Korea and Taiwan are closed for public holidays. Chinese authorities said 461 people are in critical condition, while 80 people have died so far from the disease. The scale of the virus outbreak is already affecting the Chinese economy. That's according to preliminary data. And U.S. stock index futures fell sharply this morning after more cases of the coronavirus were confirmed over the weekend. Around 5:30 a.m. Eastern Time, Dow futures indicated a negative open of more than 400 points. Futures on the S&P 500 and Nasdaq were also lower. Investors were rattled on Monday as worries about the potential impact of the coronavirus outbreak in China. Meanwhile, the United States is waiting for further clarity from the European Union over plans to introduce a carbon tax. In terms of earnings, Arconic, DR Horton, FS Networks and WAPO are set to report before the bell. On the data front, new home sales numbers are expected at 10 a.m. Eastern Time, and the Dallas Fed manufacturing numbers are due at 10:30 a.m. Eastern Time. And oil market, crude prices extended declines today, dropping below $60 for the first time in nearly 3 months as the death toll from China's coronavirus rose and more businesses were forced to shut down, stoking expectations of slowing oil demand. Brent crude fell by $1.79 a barrel to $58.90, its lowest since late October. Oil prices last fell below $60 on November 1. U.S. crude was down by $1.63 at $52.55. Saudi Arabia's Energy Minister Prince Abdulaziz bin Salman Al Said says OPEC and allied global producers, led by Russia, can help to balance the oil markets in response to any demand changes. He also said the kingdom, the de facto leader of the Organization of the Petroleum Exporting Countries, was watching developments in China and that he felt confident the new virus would be contained. And global gold prices rose to their highest in more than 2 weeks today as equities slipped on growing concerns that the China virus outbreak could impact the nation's economy, prompting investors to drop riskier assets and look for safe havens. Spot gold climbed 0.5% to $1,577 per ounce earlier in the session. Prices rose as much as $1 to their highest since January 8. U.S. gold futures rose 0.3% to $1,576. In other metals, silver rose 0.5% to $18.18, having earlier touched its highest since January 8. Palladium dropped 2.1%, while platinum fell 1%. And after the break, IMF aid to Congo Republic on hold. Do stay with us.